Hello everyone and welcome. Thank you very much for joining me. Today I'll go through the 4 stocks that I bought in the last week, and this is in the context of my £1 million investment challenge portfolio. And the activity in the last week has been all about kind of averaging down and sort of portfolio management piece. And just to give you an idea of what's coming up, we've got some Chinese stocks as well as a very popular and underpriced UK stock. So stay tuned. And let's go with 4 stocks I bought this week. So first up, we have Alibaba, and a lot in the news. I think a lot of you may have seen this already around Chinese stocks. They've had quite a bad couple of weeks in terms of the market pricing. Now, Alibaba has dropped below $200 per share, and I've taken advantage of that, and I've actually increased my position twice this week. We're looking right down here at the bottom of this long run they've been on since October last year when they were over 300. Even to get back up to that stage, we're looking at over 50% upside. I think this is a great long-term hold. It's a great opportunity to increase the position in this company. Now, I'm not going to go into too much detail on the company, and I think they will easily, in time, become a $1 trillion plus company. If you want to know more about them, I have done a full video analysis recently on Alibaba, and I will leave a link to that at the end of this video. Number 2, and that is Huya. So this is, I think, an underrated Chinese stock. They're kind of into the streaming gaming space. Now, the merger that they were going to have recently with Douyu was cancelled, and that provided certainty, but actually the market has reacted negatively to that certainty as well as to the general sort of Chinese stock sentiment at the moment. And that's been good for me because I've been able to reduce my average cost again twice in the last week. I've gone in at 13.29 and I've managed to buy some at 12.25. Has reduced my average quite a lot in this company. And they've got flawless balance sheets and they've got lots of cash per the last accounts. Yeah, it really is a bargain, this one. We've got 15 analysts and there's a very high forecast annual earnings growth rate there. And yeah, this company's forward PE is pretty low, 13. And for a stock growing that fast, that is a very attractive proposition, particularly with the balance sheet that they've got. There's no debt on that balance sheet. Now, probably the position sizing, I've probably gone bigger than I intended to on this company, but the opportunity to drop my average was too good to turn down. Right, number 3. So Boohoo's always in the news, it seems, particularly last year. They did have a quieter start to this year, but they've been in the news again in terms of the supply chain that they outsource all their production to. And again, this negative news, you can see here that they do have these regular dips when news comes out of this nature. It has reduced the price considerably. So they were over £3 for quite a while this year. I managed to get in at £2.54 in the last week. Now, overall, my average is now down below the £3. I'm down at £2.91. And what that means is my old average, I had a 46% upside if they're going to get to £5. I've now got a 72% capital upside to get to £5. So the opportunity to lower the average is a really important one if it's a company you really think is a strong company. And I think this stock will definitely get to £5 within the next couple of years. We can see they're even at £4 last summer. Too much of a stretch. And we have a look at what is forecast here. Per share earnings going from 7.5p to 13.5p. So that's a very high increase in the earnings. Yahoo Finance has got 30% a year for the next 5 years. So if that happened, that is a corking growth rate. And there's no way it won't go above £5. I think the lesson for me, and what I'm trying to share here, is that portfolio management, don't just buy a stock and forget about it. I mean, you can do that with some things, perhaps Berkshire Hathaway. But if you are monitoring the market in terms of the market pricing, and you've got really strong belief in your companies, you've got some cash on hand, then the opportunity to lower your average reduces your risk, essentially, because your risk is, am I going to lose money? If your average cost is lower, it lowers the chance of losing money. And of course, you then have the flip, which is the upside is much larger on the assumption it goes up, which That's why we bought the stock. So the two takeaways there, I think, are do monitor the market pricing, look for those opportunities because they do come around, but they're not there for very long. And it also stresses the importance of regular cash going into your portfolio or having some cash at hand so that you are able to take advantage of these opportunities. So there'd be nothing worse than sitting there right now thinking, could have lowered my average by 50p, but I haven't got the cash to do it. Now, not everyone can pile cash into the portfolio, and that's understandable, but I think part of your investment strategy should be to ensure that you are able to regularly have cash going into the portfolio to take advantage of these situations because they'll turbocharge your returns. Right, number 4 is Sophie, as I call them. And this is the financial sector. Now, do know they have got a conference call coming up for earnings on the 12th of August. So there might be some market reaction to that. And we're really interested to see how well they're doing. I got in here, reduced my average in at 1582. So sort of around this area. And again, you can see this has been quite volatile since the SPAC process. So this one, again, it's probably not in my sort of top 5 stocks, let's say, but the opportunity to lower the average means that my percentage return is going to be higher. And I think this is going to be a very interesting long-term growth stock. Now, looking at Simply Wall Street, they're saying 70% undervalued as a bit of a ballpark, and the growth here looks considerable. Revenue going from over 500 million up to 2 billion in just a handful of years. So that is very significant revenue growth and some profitability coming in there as well. Okay, so those are the 4 stocks I bought this week. The cash position's getting low now, so I just need to think about my next move in terms of how I can get that cash position up so that I'm ready to take advantage of further opportunities, particularly if the Chinese sentiment carries on and the stocks continue to drop in the coming weeks. So let me know below if you've been buying in the last couple of weeks and taken advantage of some lower prices. Otherwise, thank you for joining me, and I look forward to seeing you on the next one.